Right now, thousands of people are wasting money on things that lose value the moment they swipe their card. A brand new phone they didn't need, clothes that will be out of style in 6 months, or a fancy dinner that disappears in a single night. That's the harsh truth. Most people don't realize how quickly small amounts slip through their hands. And then, when the conversation turns to wealth, they complain about not having enough to start. But here's the reality. You don't need to be rich to build wealth. You need the discipline to take what you already have, even if it's just $1,000, and put it to work in a way that multiplies. Think about it. $1,000 might not sound like much, but it can be the spark that changes the way your financial future unfolds. History has shown us countless examples of people who started small. Warren Buffett, for example, bought his first stock at just 11 years old with money he had saved from delivering newspapers. That wasn't a fortune. It was pocket change compared to what he controls today. But the difference wasn't the size of the money. It was the mindset he carried. The mindset of planting seeds instead of eating them. And that's the first major error people make when they have a small amount to invest. They dismiss it as insignificant. They believe $1,000 can't possibly change their lives, so they waste it on things that bring a moment of pleasure but zero return. Now here's the smarter path. Imagine you take that $1,000 and instead of letting it die in a purchase, you treat it as capital, as the seed of your own financial garden. The smartest move is not about hitting a jackpot, but about building habits that turn small investments into consistent growth. Even something as simple as putting that money into a low-cost index fund, letting it ride the market for the next decade, and adding small amounts over time can dramatically change the outcome. If that $1,000 grows at an average 8% per year, in 20 years it's not just $1,000 anymore, it's nearly $5,000. And that's without adding a single extra dollar. The magic is not in the amount, but in compounding and in time. But let's not sugarcoat it. Investing comes with risks, and that's where many people trip. Another common mistake is rushing into whatever is trending. Cryptocurrencies because a friend made money last year, or penny stocks that look exciting but are nothing more than gambling. These errors cost beginners not just money, but also confidence. And once confidence is lost, they stop investing altogether. The smarter approach in 2025 is to recognize the opportunities, but apply discipline. Diversify. Spread that $1,000 across different options that match your tolerance for risk. That way, instead of chasing hype, you're protecting yourself while allowing your money to grow steadily. Ask yourself, if you had $1,000 right now, would you let it vanish on short-term pleasures? Or would you let it work for you silently, day after day, until it grows into something much bigger? Because every dollar has a destiny. Either it disappears the moment you spend it, or it multiplies when you invest it wisely. And the choice is always yours. This video will show you exactly how to make that choice in 2025, and why starting small is not a weakness, it's a strength. If you pay attention, the smartest way to invest $1,000 this year could be the foundation of your financial independence. Before we dive in, let me ask you this. What would your future self thank you for? Spending this money today or planting it so that tomorrow it grows? If you're ready to discover the smartest strategies for your first $1,000, stay with me until the end of this video. And if you believe financial education is the key to freedom, hit the like button right now so more people can learn how to make their money work for them. One of the biggest mistakes people make when they only have a small amount to invest, like $1,000, is believing that it's not enough to matter. They think, what's the point? $1,000 won't make me rich. And with that belief, they spend it on the latest gadget, a short vacation, or endless small purchases that vanish without leaving anything behind. But here's the hard truth. Wealth doesn't come from waiting until you have a fortune to start. It comes from learning how to make small amounts work for you. The discipline you build with $1,000 is the same discipline that will carry you when you're dealing with $10,000 or $100,000. In 2025, the financial world is filled with opportunities, but also traps. The most common error beginners make is chasing quick wins with their limited capital. They put the entire $1,000 into a single speculative stock, hoping it will double overnight. Or they dive into a trending cryptocurrency just because social media is buzzing about it. Sometimes they get lucky, but more often, they lose everything and walk away saying, "Investing is just gambling." That mindset kills their chance of building real wealth. The smarter way is to reframe how you see that $1,000. Instead of asking, "How fast can this grow?" ask, "What foundation can this build?" Think of it as planting a tree. No one expects a seed to become a forest overnight. But if you nurture it, water it, and give it time, that tree will produce shade, fruit, and even more seeds. Financially, that means choosing investments that may not explode in value instantly, but that provides stability, growth, and confidence. For example, a practical move in 2025 is to split that $1,000 into different buckets. You could place $500 into a broad market ETF that tracks the S&P 500. This gives you exposure to hundreds of strong companies at once, reducing your risk compared to betting on a single stock. Another $300 might go into a high-yield savings account or a short-term bond ETF, providing security and a small return while keeping your money relatively safe. And maybe the remaining $200 is placed into something higher risk but higher reward, like a cryptocurrency or a disruptive technology stock, but only as a small piece of the whole. That balance allows you to participate in growth without exposing yourself to disaster. The key is this: your first $1,000 should not be about trying to hit the jackpot. It should be about training yourself to avoid the most dangerous mistake, putting all your eggs in one basket. Diversification is not a buzzword, it's protection. Even if one investment fails, the others keep your portfolio alive. Over time, this is what separates those who give up from those who grow. Ask yourself, if you lost that $1,000 tomorrow, would you feel crushed and never invest again? Or would you see it as a lesson that prepared you for bigger opportunities ahead? The way you answer that question will tell you if you're ready to think like an investor instead of a gambler. So before you move on to choosing where exactly to put your money, remember this: the smartest investors in history didn't avoid mistakes. They avoided fatal mistakes. Your job with $1,000 is not to become a millionaire overnight. It's to avoid the traps that wipe you out and to build the habits that keep you in the game. And once you master that mindset, you'll be ready to discover the smartest opportunities available in 2025. Now that we've talked about avoiding the traps, let's focus on where that $1,000 can actually go in 2025. The truth is, there are smarter options today than ever before. The challenge isn't finding investments, it's choosing the right ones for your goals, your timeline, and your tolerance for risk. And remember, the way you invest this first $1,000 will shape how you handle larger amounts in the future. Let's start with one of the smartest and most proven choices: low-cost index funds and ETFs. By putting even a few $100s into a fund that tracks the S&P 500 or a global market index, you're instantly exposed to hundreds of companies at once. Think of it as owning a tiny slice of Apple, Microsoft, Google, and dozens of others without having to pick winners yourself. Historically, the S&P 500 has delivered an average of around 8 to 10% annual returns over long periods. That might not sound explosive, but the power of compounding makes it extraordinary. $1,000 growing at 8% annually becomes over $2,000 in just 9 years, and that's without adding another dollar. Imagine if you consistently added $100 each month. Suddenly, you're not playing small anymore. But ETFs aren't the only option in 2025. Fixed income investments have made a comeback because of higher interest rates. High-yield savings accounts, treasury bills, and short-term bond ETFs are offering returns we haven't seen in over a decade. This means that even with low risk, your money can generate solid growth. For example, if a high-yield savings account pays 4.5% annually, your $1,000 earns $45 in interest in a year, risk-free. That may not make you rich, but it protects your money while keeping it liquid, ready for bigger opportunities down the road. Of course, we can't ignore the more exciting and risky options, stocks and cryptocurrencies. The mistake many people make here is putting all their money into these volatile assets. But used wisely, they can supercharge your portfolio. For instance, putting $200 of your $1,000 into a tech stock you believe in can give you the chance to ride future growth. The key is research. Don't buy because it's trending on social media. Buy because you understand the company, its products, and its future. Similarly, if you allocate $100 to a cryptocurrency like Bitcoin or Ethereum, treat it as a long-term play, not a lottery ticket. In the last decade, Bitcoin went from being nearly worthless to tens of thousands of dollars per coin. But it's volatile. It can drop 30% in a month. That's why it should only ever be a small piece of your portfolio, not the whole thing. Another overlooked option in 2025 is investing in yourself. Many people underestimate the return that comes from education, skills, and side hustles. Imagine taking $200 of your $1,000 and buying a course that teaches you how to code, trade, or build a small online business. That skill could generate thousands of dollars in extra income over the years, far more than the stock market could ever offer on such a small initial amount. Some of the wealthiest people alive today didn't just invest in markets. They invested in knowledge that multiplied their earning power. So the smartest way to split $1,000 in 2025 could look like this: $500 into ETFs for stability and long-term growth, $300 into safe fixed income options for security, $100 into a higher risk but high potential play like crypto or a growth stock, and $100 into self-education. That way, you're diversifying across the market, safety, growth, and your own human capital. You're protecting yourself from risk while still opening the door to opportunity. Ask yourself this: if you divided your $1,000 this way, would you feel more confident knowing you're protected on one side but still have the chance for big growth on the other? That's the real balance of smart investing. It's not about choosing one path. It's about building a portfolio that works even when one part stumbles. Because here's the truth. In 2025, the smartest investors aren't just betting on one thing. They're building resilient systems. And once you've chosen where to put that $1,000, the real challenge begins: learning how to make it grow consistently, year after year. That's where strategy, discipline, and compounding come into play. And that's what we'll dive into next. So you've chosen where to put your $1,000. Maybe in ETFs, maybe in a mix of safe and growth-focused assets, maybe even a small piece in crypto or personal education. But here's the truth. Investing doesn't stop the moment you press buy. The real difference between someone who sees their wealth grow and someone who ends up disappointed comes down to strategy, consistency, and the discipline to stick with the plan. The biggest mistake beginners make at this stage is impatience. They check their portfolio every day, panic when the market dips, and sell at the worst possible time. Or they get overconfident after a small win and pour all their money into one risky bet. These habits kill the compounding effect before it has a chance to work. Remember this: compounding is like gravity. It pulls wealth upward, but only if you let time do its job. Pull out too early and you break the cycle. So how do you grow $1,000 into something meaningful? Step 1. Reinvest everything. If your ETF pays dividends, don't cash them out for pocket change. Reinvest them automatically. Over time, reinvested dividends can account for up to 40% of your total returns in the stock market. Imagine your $1,000 grows to $5,000 over time. If you had spent every dividend along the way, you might end with $3,500 instead. That's the hidden power of reinvesting. It accelerates growth silently in the background. Step 2. Build the habit of adding to your investment. Even small amounts like $50 or $100 per month completely change the game. If you only invest $1,000 once and never add more, your growth will be limited. But if you add $100 per month to that same portfolio growing at 8% annually, in 10 years, you'll have over $18,000. That's the difference between dabbling and committing. Wealth isn't built in one transaction. It's built in consistent steps. Step 3, automate as much as possible. The more decisions you leave to emotion, the more likely you are to sabotage yourself. Set up automatic transfers into your investment account. Automate dividend reinvestments. Automate contributions to a savings account or brokerage. By removing the need for constant decisions, you protect yourself from fear, greed, and procrastination, the 3 enemies of growth. Another overlooked but powerful strategy is to balance risk and reward as you move forward. For example, maybe in 2025 you start with a 50% allocation in ETFs, 30% in safer bonds or savings, and 20% in higher risk assets. As your portfolio grows, you might gradually shift some of that high-risk allocation into safer options to protect your gains. This is what seasoned investors call rebalancing, making sure your portfolio reflects your goals, not just the market's mood. Don't forget the mindset component. Discipline means resisting the temptation to compare yourself with others. You might see someone online who turned $1,000 into $10,000 with one lucky crypto trade. But you're not building luck. You're building a system. Ask yourself, would you rather gamble and risk losing everything, or build steadily with the certainty that your wealth will grow over time? The best investors know that slow, steady growth is the true path to financial freedom. And here's something even more powerful. $1,000 can be the start of a chain reaction. Once you experience the satisfaction of watching that first investment grow, you'll want to add more. That $1,000 becomes $5,000, then $10,000, then beyond. At some point, you realize you're no longer just saving money. You're letting money work for you. That shift in perspective is what separates consumers from investors. So let me ask you this. Are you willing to commit, not just once, but month after month, year after year? Because the smartest way to invest $1,000 in 2025 isn't about finding the perfect stock or the hottest trend. It's about creating a routine that turns small contributions into massive results over time. If you build that discipline now, there's no limit to what your financial future can look like. And once you understand the power of strategy, consistency, and compounding, the final piece of the puzzle becomes clear, the mindset that keeps you going for the long haul. That's where we'll go next, as we bring everything together in the conclusion. We've reached the end of this journey, and by now you understand that investing $1,000 in 2025 isn't about chasing hype or gambling for quick wins. It's about building a foundation. First, we saw the biggest mistake beginners make: dismissing small amounts as unimportant and spending them on things that disappear instantly. Then we uncovered the smarter mindset, treating even $1,000 as capital, as the seed of financial independence. We explored the best options available this year: broad market ETFs for stability, bonds and savings for safety, stocks and crypto for growth potential, and even investing in yourself through education and skills. Finally, we looked at how discipline, reinvesting, automation, and consistency can transform this starting amount into a long-term wealth-building engine. The real secret is simple: wealth doesn't grow in one giant leap. It grows step by step, decision by decision, habit by habit. Every dollar you invest is a soldier working for you. If you send it to fight battles for instant gratification, it disappears. But if you send it into investments that compound, it multiplies and brings reinforcements year after year. That is how ordinary people build extraordinary wealth. Not luck, not timing the market, but commitment and discipline over time. And here's the question only you can answer. What will you do with your $1,000 this year? Will you let it slip away on short-term pleasures, or will you take control and turn it into the first brick of your financial empire? Remember, the decisions you make today determine the options you'll have tomorrow. 10 years from now, your future self will either thank you for starting or regret that you didn't. The smartest way to invest $1,000 in 2025 is to stop waiting, stop doubting, and start building. Because once you take action, you'll realize something powerful. It's not about the money you start with. It's about the person you become in the process. And when you master the mindset of an investor, no amount is too small and no dream is too big. If you found value in this video, don't keep it to yourself. Hit the like button, subscribe for more strategies to grow your wealth, and share this with someone who needs to hear it. Drop a comment below and tell me, if you had $1,000 to invest today, where would you put it? Let's build this journey together.